I think sentiment has been pretty bearish. I think there's some broader contagion around hidden leverage, particularly as it pertains to DeFi.
Yo, what's up, dude? We got to talk. What's going on in the markets here?
Yeah, so I think we want to address some of the selling pressure here in the crypto markets, and I think broader macro markets as well. I think people need to be informed on what's going on and why we're seeing sort of this sell-off. So, I think we were talking about this before, but there's been a number of, I think, hidden leverage pockets that are basically unwinding after that October 10th perpetual futures deleveraging, right? That sell-off. And that's coming from a number of DeFi protocols. I think broader macro markets and some of the narrative around Fed potentially pausing rate cuts is contributing to this. But yeah, let's dive in. Let's just chat through it and just, go from there.
Yeah, I mean, we were kind of weak already coming into this and have been weak, as you mentioned, throughout most of the month. But when you look at the last kind of flush here, lower this afternoon, I hit you up and I was just like, Dan, what do you think? Because I'm seeing some headlines related to Contagion, related to Stream. You've got some kind of exploits recently in DeFi. Like, what's your read there? I was like, all right, what do you see it in the groups?
Yeah, I think sentiment has been pretty bearish in most of where I pay attention, and most of the traders I talk to, sentiment has been pretty bearish for the last couple of weeks. I'm not as focused on these exploits. There was Balancer and some of these DeFi protocols were exploited. I don't think that, that might contribute a little bit to it, but I don't think that's at all the reason for this sell-off today. I think we were always going to test 100K on Bitcoin. The fund flows and ETFs and some of that recently shifted over the last couple of weeks, where I'm really trying to dig in and pay attention. And, I can share this at some point is I think there's some broader contagion around hidden leverage, particularly as it pertains to DeFi. So sure, these hacks and some of that might contribute to it. But I think after the October 10th sort of unwind, it exposed some hidden leverage in some of these lending protocols, particularly Morpho, right? So if for anyone that's not familiar, Morpho is a DeFi protocol that allows custom borrow and lend pools, right? So like anybody can kind of go in and create their own borrow lend and basically create their own assets to borrow and lend against. And it was one of the bigger, I guess, protocols that came about this cycle. It's actually how Coinbase does their borrow lend on Bitcoin.
Yeah.
So that is something where I think people aren't, I don't know what's going on with this. People aren't as aware of some of these, like the massive leverage that exists in these systems. So it came out a few days ago that there were a number of, I would say, whales, sophisticated funds, et cetera, that had created off-chain collateralized positions that they then moved on-chain into Morpho, which created sort of like this toxic leverage system where they were minting like synthetic stablecoins against these collateralized positions. Let me bring up the article, but I think we're beginning to see the unwind there. And I think this was sort of one of the risks of, I guess, tokenization in some ways. Morpho is a protocol for tokenization. And I think we're just beginning to see an unwind there after this sort of blow up and sort of Fed narrative shift on interest rates. So I think a lot of people were positioned for more liquidity to come in, for QE to start again, for, this everything trade, AI CapEx, unlimited spend, unlimited money. And I think some of these riskier funds were positioned for that, especially utilizing DeFi and utilizing some of these protocols. And I believe we're seeing a little bit of an unwind there. So that's kind of what I was paying attention to.
You think it kind of ends here? Is it trying to test this psychological level of 100? If it holds, we kind of bounce? Or do you really think, when I'm looking at things like Stream Finance is disclosed, they filed for bankruptcy, but disclosed a $93 million loss, causes a depeg of XUSD. And now in terms of debt that might be at risk of repayment. 285 million that seems to be across different protocols like Telios, Elixir, Euler, Silo, Morpho. I mean, is it something like, do you think there's something worse to be worried about?
I think it's hard to say. I think we're beginning to see this stablecoin narrative begin to break, right? Like, I think stablecoins got accepted. We had legislation on it. People started adopting it. And then these, like, I want to say like synthetic ones or less trusted, less liquid stablecoins kind of came to market, and then it became a yield game, right? So, I mean, I don't know how popular some of these protocols were. Stream Finance, I mean, $93 million hack, certainly not something to ignore. But what I'm worried about is contagion across other protocols, because what happens is, and if, I have this Twitter article, I can bring it up if people want to take a look. But what happens is these synthetic stable coins that are minted based on kind of collateral that might not be there on Stream Finance or some other protocol A, let's say, it's then moved to protocol B, and then it becomes a looping, kind of like a looping hypothecated trade. So, I'm looking at an article where it's called "Who the F is on Morpho," right? There's just $12 billion that is hanging out on this protocol, right? That's nothing to shake a stick at in crypto. That's pretty big in crypto. So there's this kind of deep dive analysis onto that. And we're taking a look at here, this graphic here is the second largest vault on Morpho. And if you take a look here, you're seeing like SRUSD, USDC, M Hyper USDC. Like, these are all synthetic created assets, whether they have good collateral or not, that are being used to borrow against, right? So there's this hidden contagion, I think, or potentially hidden contagion. I don't want to go too far because I don't know that for sure. But, when you start seeing all these synthetic, like USDC, PTUSDO, 20, like, these are structured products essentially, right? These are leveraged structured products on chain, and there's potentially $12 billion of this, sitting in as collateral or whatever in the system. So that's where I think you get this unwind, right? You get this deleveraging event. People miss it because they're looking for something simple like a hack, right? But a hack might expose it, right? But then, you look deeper and you're realizing there's all these random structured products, or I guess you would say like rehypothecated stablecoins. So this article, which I can post later, post in the show notes or post it to Twitter, is just kind of explaining this idea that there's some of these protocols that are doing this, which is basically they're creating market neutral portfolio, depositing collateral, borrowing against it, redepositing that borrowed amount as new collateral, borrowing again, right? It's just you're looping leverage that doesn't exist. Or sorry, you're looping collateral that really doesn't exist. So it's like a rehypothecation thing. And so that eventually unwinds. So we could be looking at the beginning of that unwinding. Does that make sense?
Yeah, I think so. I mean, it sounds like to me you're not saying that the collateral that's used to back these loans that then is kind of re-levered up or looped. You're not saying that it's bad necessarily, but that if the cracks were to emerge, that's what could cause kind of some further unwinds, contagion, or that's where the risk is really exposed. And certainly when you add leverage to it, that can compound it.
Yeah, exactly. I mean, I'm just kind of going off of this article, and I think there's a deeper dive to be done on it, deeper analysis to be done on it. But if you're looking at, this is the second largest borrow vault on Morpho, DeFi protocol Morpho. And if you look at some of these symbols, like these are just synthetic assets that somebody created that, are basically being looped. And what I mean by looped is borrowed against deposited. It's just, it's a way of getting, rehypothecating based on like, synthetic assets essentially. So rehypothecating leverage based on synthetic assets. So,
but you don't think it's happening here? That's not like, it's something to be aware of, but maybe not what's driving the prices to 100,000 right now.
think it's something to be aware of that could push us lower, right? If it were to unwind. But I think the cracks are beginning to emerge, and that's why we're testing 100K again. Now, that's not to say it's just isolated to crypto, right? I think we're seeing a broader sell-off in traditional markets. So if I go and I look at like SPY, let's just kind of take a look at QQQ or SPY. I think we we're down 2% today. Crypto always trades, as I would say like levered QQQ in some ways. So a 2% move, we're going to see a larger move in crypto. So I think that what I just showed with this like rehypothecated synthetic leverage, along with potentially traditional markets pulling back, would push us down lower below 100K. But I think 100K is that level to look at, right? We were always going to test that over the run up from April, right? We we kind of pulled back in April off of the tariff scare. We're seeing that come back again. I think people were set up, and the market was positioned to where the Fed was going to always cut and QE was going to start again, and we would get infinite money, whatever that narrative was. And I think I don't think we're seeing that, right? I think there's a lot more fragility in the system, and I think the Fed is not signaling that in December, right? So yeah, that's my take on it. And like I said, a potential contagion that is, within DeFi, within crypto, that could push us lower.
What's going on with Binance and Wintermute? I think after the liquidations back at the beginning of October, I saw a couple things where market makers are pissed. Maybe Binance was out to get them. I don't know. What's going on over there?
Yeah, so I'm not totally sure how true this is, right? I'm not trying to like cause rumors or whatever, but I thought an interesting tweet and chart in isolation is that nearly all of the active sell pressure on Bitcoin over the last 2 days has specifically come from Binance. So this chart here, this graphic, we're looking at CBD, and so we see Binance, Coinbase, Bybit, OKX, and Kraken. Binance is the green line, and it's basically led the entire sell-off here. So cumulative volume delta, most of the volume in this sell-off has come from Binance. So I don't know, there's some speculation. There's been some headlines. Let me find another headline source about this. But basically, Wintermute, which is one of the largest, if not the largest market maker in crypto, is in a dispute, let's call it, or a potential dispute with Binance over some agreement, liquidity, whatever it might be. But that, there's speculation there that something's going on Binance. There's some hole, maybe there's some hole that's being covered. I don't know, but I thought this was a really interesting chart to take a look at.
And I guess kind of like speaking of exchanges, I think you mentioned to me at one point that there could be some hidden risk in, let's say, some of these smaller exchanges. You seeing anything else like that? Or kind of what's the word on the street?
Yeah, so there's a number of tier 3 exchanges in crypto, and those exchanges can operate because they offer traders, 100 more access to coins. They're non-KYC, right? They don't have the risk controls that we expect from tier 1 Coinbase, Kraken, even Binance, even traditional brokerages. They run very good risk controls. Some of these tier 3 exchanges don't do that. And so they're willing to allow more risk, less, I guess, controls around their operations. And typically every cycle we see a couple of those blow up. Now, one of those is an exchange called MEXC. And MEXC is basically a no KYC or little KYC derivatives exchange. So primarily they're allowing 50x, 100x leverage on meme coins, very, very risky long tail assets. They're not transparent. Their operations aren't as sophisticated. And there's some talk there that potentially that's an exchange at risk. Now, I don't want to spread, I'm not trying to spread rumors here. I think you got to be very careful. I have there's not really a lot of evidence to this. It's just kind of been talked about. But I point to MEXC as one that could potentially be, another hidden risk where an unwind would happen or a massive deleveraging event would happen. So yeah, and those are always tier 3, what I consider tier 3 exchanges that, don't necessarily operate underneath the same rules that other, exchanges that we use or traditional finance companies would operate as. So yeah, all things that have been, I guess, could be amplified with a sell-off.
Yeah, I'm just looking at MEXC on DeFi Llama, and I have no idea how up to date this is or how accurate it is. But if you look at MEXC on DeFi Llama, shows 4.7 billion in assets. But the chart is interesting, right? It's been at $1 billion in assets, spiked around April to 3 billion, and this recent spike in terms of assets on the platform, you go in August from like just above $1 billion to about the 4.7, almost 5 billion that we're at today. Not that that's massive, but it's big. So just to kind of put things in context or put some perspective around it, you're looking at a $5 billion exchange if you think about it that way. If this is accurate.
Yeah. So I think the thing you got to look at is, and again, I don't want this to come off like I'm spreading rumors around MEXC being, illiquid or whatever. I just did a simple grok on Twitter query for it. And apparently they did release their proof of reserves update. Now we know that those can be gamed. So I wouldn't necessarily say that it's, the truth, but they released their proof of reserves update on November 2nd. So a couple days ago. They have 100% asset coverage. There's some verification there to prove that. So it doesn't look like there's some controversy here. So there's always some solvency questions around this. Let me see if I can do a little bit more research on this just to see if I can find some stuff here.
Yeah, but I mean, it sounds like if you're looking for where the cracks could emerge, not necessarily that they're there, but it's like, all right, what could kind of cause the next blow up here? From what I'm hearing, kind of think it's like this, let's call it rehypothecated leverage that exists across all these different protocols in DeFi, where if one thing blows up, the rest of them could blow up in some ways. But then in addition to that, it could spill over, obviously, depending on what people are trading and how it's related, but could spill over into some of these exchanges that, just generally speaking, are a little bit riskier than you would think, than like a Binance.
Right. I think so. And one of the things I was trying to find was this article about there's just some rumors going on, like that Wintermute, if you want to go back to my screen, Wintermute CEO shuts down Binance lawsuit rumors. So, they're denying it, but this was due to that market crash in October. And there was a $20 billion liquidation event. Market maker Wintermute and exchange giant Binance stoke fears of further contagion. There's rumors of this legal battle. They're kind of coming out and saying, the CEO of Wintermute's coming out and saying they're denying it, right? But I think this caused some jitters in the market, right? So I think that's what you got to take a look at, is this contagion, right? This broader contagion around this deleveraging event. It's never just one event, right? There's washouts, there's things where people get a little bit out over their skis, but this was a large liquidation and cascading liquidation. So there's going to be you can think that, there'll be other victims here, right? So I'm just trying to kind of put together some of the rumors and analyze this a bit. So.
Well, we're flashing lower again now. I've got 99.3, let's call it. If we go all the way back to June, because that's really the last time that we were in the sub 100 territory, you, given this chart I'm looking at, you bottomed out around, let's call it 98.5. So that would be kind of where I would be looking for this to go, I guess, in the next almost 5 minutes, the way that it's trading. But are you stepping in here, dude? Like, how are you thinking about the move? Is there anything that maybe is a little overextended? It's tough to say as people kind of freak out underneath 100 here for a second. But I mean, even to put, like, I'll take one step back to put context around the liquidations. Estimated 20 billion earlier today in terms of liquidations around this move. I've seen like 1.3, 1.5 billion. So a lot smaller. Doesn't make it any easier, I suppose. But anyways, all that said, anything you got your eye on? I mean, ETH's almost at $3,000.
I'm waiting here. I de-risked a little bit because I just wanted to get liquid. I think like I sold a little bit of ETH. I'm not really stepping in right now on Bitcoin. Honestly, I'm looking at 90K on Bitcoin to be a level that I think is important. I think we're just kind of beginning a little bit of the sell-off here. Sentiment was bearish for the last couple weeks. Okay, and like and crypto always is always a leading indicator for risk assets, right? It's always the first to go down when there's broader macro or traditional financial market, traditional asset, and that's on the way up and on the way down. And I think, we saw the sentiment shift over the last couple of weeks. So on Bitcoin, I'm looking at 90,000 as a key level. If we break below that, 85, I have, I'll tell you what I'm doing. I think it's fair that, I'm honest. I have limit orders in on Bitcoin around 82 and 80. So I think that's a level that we could potentially see. 75 is not out of the question. We could fill this kind of gap from the April lows, but I would expect this to continue in some way, some of this selling pressure. So, I'm looking to step in below 90, 82, 85, potentially 80 to begin looking to bid, but I'm definitely not doing anything right here. We got to see what kind of transpires over the week. Again, the broader market's selling off. We don't know what else is, what other contagion might be, leverage, stuff like that. Again, remember we have these DATs, we had the slowdown in ETF flows. Yeah. So, and I just want to take a look at the liquidation chart. We're seeing 1.53 billion longs have been liquidated in the last 24 hours.
Ouch.
So, yeah, let me see if I can find, 24-hour liquidations, about 1.89 billion. So I think you want to be patient. I'm being patient. You could see here ETH and Bitcoin basically making up most of that. So when the majors are selling off, the most liquid assets are selling off. I think we got a little bit more to go. But, I don't think it's out of the question that we see 85, K on Bitcoin soon.
Yeah, I mean, it's been at this speed, it's certainly trading that way. I think we're down 25-ish% off of the highs. And yeah, I mean, clearly within the ranges and the way that we've traded previously. It wouldn't be insane to think that you could go to 80, you could bounce back to 120, et cetera. Obviously, that's how this stuff trades, and it does seem like you're trading in ways. I mean, maybe it's just a little bit of continued liquidations here. It's kind of after the equity market close where you see some of that at times. But it is trading in a way, in my opinion, where it does feel like there's something else kind of going on behind the surface. Maybe not. Maybe I'm just overreacting. But it's been a sharp move lower.
Yeah, and I think it's interesting. In the past I like reading some of the context around these liquidations. In the past 24 hours, 434,000 traders were liquidated. Total liquidations comes in at 1.93 billion. So largest single liquidation happened on, let's see, what's HTX exchange for 47 million. So yeah, I would think we are going to see more liquidations happen here over the next couple of days. But I'm curious on your end, Ryan, is there anything in the broader macro picture or markets that you're looking at? Because I also have been following a story where some Fed officials are not in consensus that a December rate cut will be in. So I think that could be contributing to this a little bit.
Yeah, I mean, that stuff is probably a bit slower moving. I think it's all still pretty bullish. On the Fed decision, it was like 10-2, so they had two dissenters. I don't know if you typically get dissenters or not, but I think probabilities still skew towards a cut. I think what Powell was able to do pretty well, and he's always been able to do this, is that if they announce the end of QT, which I think is a bigger deal, when you look at on a 1-year forward basis, what could that be the equivalent of in terms of liquidity? It's like 400 billion. It's about 40 billion a month. So that's the big deal. But if you announce QT at the same time that you guarantee the interest rate cuts in December and kind of maybe clear the path for additional cuts into 26, I just think stuff just rips. And they're kind of conscious of that. At least that's my read on it. there's an argument that in some cases, in many parts of the market, there's some bubbles that have been forming. I don't think they want to be seen as contributing to it, even though the Fed generally contributes to it, at least not like in a binary sense. And so I think once the market kind of got the read that you're not going to necessarily 100% get the interest rate cut, which is the way that I'm assuming Powell intended it to be read, then it contributed to a lot of this negative sentiment. We didn't get a huge deal between the U.S. and China. We got a truce, more so, kind of kicked the can for a year. I think people were probably a little bit more bold up on, could you get an end to this? Could you get some sort of larger trade deal? That said, it's like the truce is still pretty bullish, but short term, we've looked past that. If you look at what else could possibly get you a bounce, right? Because we do know, on one hand, I think this is also the thing to be just aware of at times. Like this administration, like Trump tweets and they pay attention to the markets, they pay attention to prices, they're heavily invested. Like whether you like him or you hate him, whatever, if you're going to trade these markets, you probably got to be aware of that. Like that's a factor, right? And so I wouldn't be surprised at all if you get to certain levels. I don't know. I don't think it's 99, but maybe it is, what you're describing, and that coincides with some announcement. It just seems like I wouldn't use the word manipulated, but maybe influenced is a better term. So I think like you could still get some of those things. You got the anniversary of the election upcoming. There are still some things out there that we probably lose sight of when you have more violent price action short term. That's stuff like the executive order around the strategic reserve. Kind of seems like we're just going to hold what we have acquired, I suppose, through some different asset seizures. Not necessarily going to add to it, but if they do add to it, then I think there's a pretty strong argument that China, Japan, and everybody else also makes a similar announcement. You only have 21 million, right? So there's like that still is out there. And I know Greg's talked about that. He'll always use Japan as the example. But there's that. And just generally speaking, like if we finally reopen the U.S. government, we get some of this data, it could swing, probabilities around interest rate cuts one way or the other, could move those probabilities higher. Let's say we get some clarity through the Clarity Act, we get the government kind of working again. Like there's some catalyst there, right? There's a bunch of those ETFs that whether it matters or not short term, there's a bunch of decisions that are pending around this stuff, which creates more capital conduits, I suppose. So like, long-winded, but there's a lot of that stuff that kind of slow moving. It kind of sits in the background that maybe reinforces some conviction if you get to those price targets that are totally rational. People get so used to it being above 100,000. It's just a number. You're talking about it at 75. That's kind of scary. But like this thing can go 75 to 200. We've seen it go 75 to basically 126. I hope it doesn't get to 75, but there's a lot that probably maybe gives you a little bit of conviction if you're buying it under 100. Like I think it's probably going to go higher over time. And I think we're still in an environment for that.
Yeah, I mean, like if I'm looking at sort of this April sell-off, 75 is sort of the low, and then it ripped back up to all-time highs at 120. So like, yeah, I mean, I just kind of drew a line here just to show, but this is a pretty significant sell-off today. And I just, it's a couple weeks of exhaustion. It's a couple weeks of like, I think negative sentiment, but even, I don't know, like even if I look at the BVIV, which is basically Bitcoin's VIX, I think that there's probably for a while now, we were trending lower, 38, 39 in September. And look at this big spike today. So here, let me turn off this. But yeah, volatility has definitely picked up. Definitely other stuff going on in the market from a macro perspective. And yeah, we'll have to wait and see.